Hello. Good afternoon, everyone. Good evening, good morning, depending on where you are. Hope you're all doing well. It's Friday night here. I'm in Europe, and we'll get this cracking. I want to break down and kind of wrapping up this week in essence, and also um, looking forward, right? Looking forward in the next week and seeing what we have, right? I'll show you a few different things that I do like to look at. Let me just. How do I do this? Give me 1 second here. Let me just open some things up. And we will get started. Give it a minute though, because these things don't necessarily want to load as quickly as I would like them to load. All right. First and foremost, right, one of the main things that I like to look at as the week wraps up, right, and I'm looking forward to the next week, excuse me, geez, is going to be a calendar of some sort, right, a news calendar, forex calendar. But I want to talk about what we had cooking this week, because this week was pretty full of a lot of different things, right? The volatility wasn't necessarily that high. We've just been rotating at this top on the equities, mainly the indices, but ooh, we had a decent amount of movement based on earnings, right? Earnings was something that you didn't want to miss this week to give you some kind of understanding of how the beginning of tech might shape up. Because we had Netflix and Tesla earnings that came out. We also had INTC, which is Intel, and also IBM, which were important. We had some financials coming out, Visa and American Express. But IBM, many of the first patents for AI, right? A underrated AI name, in my opinion, as AI stocks like Nvidia continued to rise. IBM, rallied pretty aggressively as well off that earnings, gapped higher, continued the reign higher. And we'll take a look at how some of these guys performed after that earnings period. But one of the first things that I like to take a look at is who led the way, what kind of sectors led the way this week. And tech was not one of them, right? The week was led mainly by energy and also communication names like Netflix, right? Netflix that had earnings. You can see XLC, right? Communications, and XLE Energy, both the leaders of this week, up 3 and 4.5% respectively. Tech, XLK, is fairly flat on the week with some losers here, not that many losers on the week, but generally flat, right? Generally flatline. If you take the most extreme highs and lows and you just average them out, we kind of just get in the middle, and that's pretty much what the equity market did realistically. So rally in oil, right? Finally, the oil longs are paying off, and then rally in Netflix, gapping higher pretty aggressively here. So why don't we take a look at some of these guys, because we saw major earnings. We have a Fed blackout period as we lifted into all-time highs a few times. Next week we have the FOMC on Wednesday, right? It starts on the 30th, but the FOMC rate decision is going to come out on the 31st, which happens to be Wednesday. Ooh. That was a crack. But if we take a look at some of these, before we deep dive into SPY, Triple Q, all those guys, if we take a look at some of these earnings names, right? Netflix up 18% this week with new deals, increased paid members, and other additions. You can see we gapped up aggressively from that earnings period, and we just continued to truck along, right? We're back close to that 600 level on Netflix. Tesla, on the other hand, Tesla down about 14% this week, as we saw profit margin concerns, right? Concerns that Elon is now spending too much time and energy on X rather than Tesla, and kind of, I guess, losing confidence in Elon himself and Tesla, right? He talked about different profit margins, especially on the Cybertruck, other things as well that can affect the bottom line that kind of pressed forward guidance a little lower, as well as we also missed on the earnings period. You can see that we've gapped down aggressively. Generally, Tesla earnings, right, beat or miss, they don't do extremely hot, especially over the last few quarters, realistically. IBM, another one of those, I guess tech, it's pretty old school at this point, right? It's been around for a billion years. It's got very nice fat dividends and gapped up very aggressively. Some of the first AI patents on IBM. Other things like American Express gapped up higher, Visa gapped down, but pretty much filled the gap. And those were mainly the bigger names in the earnings period this week. We also had a lot of news, strong economic data that came into the week that helped markets kind of rally a bit. Yesterday, off the overnight lows, the GDP numbers came out. Another growth quarter, or advanced GDP at least, came out. Another growth month where we've seen unexpected increase in this economic data. Also solid PCE numbers. I believe the core number was expected around 3%, 3.2%. It came out at 2.9%. So we're getting closer and closer to that Fed's inflation gauge, right, target of 2%. The preferred Fed metric is the PCE, and it's slowly climbing down to that 2% figure. So again, this data has been helping markets at least sustain back into these all-time highs overall. Next week, we do have the Fed decision. That's going to be front and center, right? If we pull some of these guys over, some of the stuff that I like to look at realistically, we'll pull this guy over here. You can go to CME Fed Watch Tools and get a lot of information there, right? We have on Wednesday, January 31st, right, come out. The current rate target is 5.25 to 5.5. Right now, 525 basis points, right? There's 98% chance that continues, right? So rates unchanged. The first expected rate cut was expected in March, right? Now the probabilities are a little skewed to sustaining the same. So that's going to be interesting. It's going to be very important to watch how the Fed kind of presents this data, especially forward-looking. In terms of how the monetary policy is going to shape up in terms of rate cuts this year and future rate cuts, right? The dot plot is going to be extremely important. Now, we've been just holding into these highs very well over the past week or so. And I think that this euphoria is kind of going to get, I think, put to an end after the Fed consensus comes out and we pass that threshold into the end of next week, where we can see, right, not a crazy pullback, but something more sizable on the pullback variant, so we can continue back probably into a new high. I think that right now markets, if they do pull back, they're going to pull back based on the lack of buyers more so than aggressive sellers. We're at all-time highs. The reality of it is that there's no really strong aggressive sellers that are going to be pumping positions into this. It's more so going to be buyers waiting for positioning lower. That'll cause a pullback in these markets. So as I'm looking at this, if we take a look at some of the other stuff here, right, remember, if you go to Forex Factor, you can get a lot of the news right there. They color code their folders differently, orange, red, yellow, so on and so forth. So next week, if we look at the red high impact events, we have JOLTS job openings that come out on Tuesday. What else do we have? I mainly look at the U.S., right? ADP non-farm employment changes, employment cost index, the FOMC, which is the main statement that comes out on Wednesday. That's where all eyes are going to be on this. And then we have some unemployment claims and non-farms on Friday to wrap up the week on February 2nd. So a pretty jam-packed week at the beginning and at the end. I think that we're going to be very, very low volume and movement into the Federal Reserve meeting, or I guess press conference statement and funds rate decision. So Monday, Tuesday, I'm not expecting too much movement. We're probably going to see more sporadic movement from afternoon of Wednesday until the end of the week. So that's something to caution for as well. And I think that this meeting marks maybe one last hurrah in the equity market before we start to see prices pulling down slightly. So if I take a look at the SPY here, take a look at a few of these indices and take a look at other assets as well, see what kind of opportunity plays out. But is this... No, I don't think... I need this thing to load. Maybe you guys are going to be better off looking at this screen. So if we take a look at the SPY and the other indices, we get some kind of information. We'll look at the market internals for some of these as well. If this would like to load, that'd be fantastic. So this is my little gauge here on the SPY for my expected year. I know a lot of people disagree with this. I posted a video about this, but generally speaking, I was looking for a rally into the start of the year, and right now I think we're going to be topping out into next week at some point to get a more significant pullback for prices to get bid back up again. And ideally on the SPY, it looks like something like 460 realistically. I think that next week, especially into the beginning of the week, we kind of just flatline before we start pulling down a little more into the end of the week. That's mainly what I'm looking for. The lack of buyers, especially today and into this session, is pretty obvious, right? We got into highs and they kept getting trapped and trapped and trapped. And I think that we're starting the pullback, especially with tech, right? These tech earnings so far aren't really hitting that hard. Tech has been weaker, as we'll see with the triple Qs in just a bit. But on the SPY, I'd like to target somewhere around that 460 as the next major support, right? I think that even down at that, we can say maybe a bit lower, right? Or sorry, not a bit lower, but 480 is probably gonna 478, 479 is probably going to be the most immediate area of interest, and then down into that 468, 460. 460 would be great. I think that'd be a gift for some of these buyers to push back in into the end of the first quarter before we start seeing things that trickle down a little lower. And again, right, I'm not saying that there's necessarily a catalyst for this, but there's one thing that we do need to know. If they start getting super dovish and the expectation for multiple rate hikes starts to increase and more aggressively, there's pretty much one path for stocks after that, and that's going to be down, right? Equities are going to start to see pullbacks and slumps as that shapes up. Now, the triple Qs as well, I think they're topping out. They kind of overextended past the area that I was kind of looking for at the beginning of the year, right? I was kind of expecting this maybe in March, but I think that a pullback is due maybe somewhere between 391 and 398 on the triple Qs before we go and attempt a new high. If we print a lower high, that's going to be a lot based on earnings. It's going to be a lot based on money flowing out of big tech and starting to push into other things, as we are pretty overvalued, right? One of the main things that we have to understand is that AI and the bubble in AI, quote unquote bubble, there's still a lot for this thing to expand, and if you guys think you've seen the top of AI, it's a wrong narrative in my opinion. I think there's still a lot more upside for that AI bubble, right? Quote unquote bubble. And I think that's going to sustain a lot of tech. But once they start pulling large money out of tech because things are extremely overvalued, right? They're not looking as attractive, and they start cutting rates, we're going to see tech get weaker than the other assets. And then money's going to start flowing back into them at some point, probably towards the end of the year. Now with triple Qs and SPY, triple Q, SPY, Dow Jones, because Dow Jones recently popped a high, I've opened up some hedges on them to the downside for the middle of March to see if we can get that downside exposure, right? The hedges are very cheap. You look at like put spreads, for example, you buy a put and you sell a put that's lower. You're not paying that much money for that exposure to hedge your portfolio positioning to see if we can get that pullback that starts some point next week or the beginning of February, I would say. Dow Jones is another one of those names that is going to be interesting to me. Made a new high today, actually, and again, I think that this one has rallied very, very aggressively, but I still am looking for pullbacks in these. IWM, the last equity that I'm going to look at in terms of these ETFs indices here, the weaker of the bunch. It's compacted of small cap garbage names, in my opinion. I think that if we pull back aggressively in the market, this is the one that's going to be hurt the most. And the fact that we're not even back into the most recent highs around that 200 level, I think the weakness is going to come in this one next week. So, right, I talked about AI. We can look at semis, SMH, which has been doing very well with NVIDIA and AMD's most recent upside momentum move. Right, if we take a look at NVIDIA here as well. NVIDIA through that 600 marker, and these big tech names, right, they're continuously rallying. Now, I'm not saying that they're overvalued. Well, they are overvalued, but I'm not saying that I want to continuously short these things, but I think they are getting fairly fragile, right? One of the main ones that I want you guys to look at and consider is Apple, because Apple is the biggest market cap, right? Apple's weakness is much, much weaker than the other tech names. So if I can find names like this that hold harsher weakness, I think this could be a leader potentially in the coming weeks for the overall market. So if I'm looking at Apple like this, I'm looking at Apple and I'm seeing there's more weakness and I'm looking for more downside in Apple rather than trying to pick tops on like Nvidia, AMD, what's it called? What was the other one? Or Amazon, right? You look at Amazon, Amazon's running fairly high here, Google running fairly high. I'm not saying I want to short these tech names, right? That's not what I want to do. I want to find the weaker links, especially the ones that are very influential like Apple. Look for the short side on those and see if these guys can follow through, and mainly just tinker with the index itself, right? If you look at other things like yields, right? US 10-year. Let's see. The US 10-year climbing up slowly here. I think that we get a most recent push maybe into 4.3 or so, which puts downside pressure on bonds, and then we start turning this over. I honestly wouldn't be surprised by the end of the year if we can target somewhere into this mid 3 area. Let's draw something so we can make it a little more concrete. Right? If we go something like this, right? This is my expected target on these yields, which will put some upside pressure on the bond market. But I think that we have a little more room to the upside in these yields, especially after this meeting in the Fed, because if they start talking a little more hawkish and they start talking about higher for longer, what we're going to see is a push in this yield market, putting downside pressure on bonds and equities alike before, right, we get that pullback in yields, in my opinion, which brings about another topic, right? Energy. If we look at crude oil's most recent rally, I think it's just starting, and the pricing in crude oil, if it goes as expected and we start really pressing the boundaries, start moving past that 80 marker and rallying on this thing, what we're going to get out of crude, right? Look, this is my schematic for crude for the year. What we're going to get out of crude is going to be a press on inflation, right? So as crude runs up, inflation is cyclical, and I think that the inflationary pressure is going to start coming back, and we're going to stray away from that Fed's target rate, where they're going to keep rates higher for longer, and then we enter this downside cycle in the equity market, right? So I'm still looking long on crude. I've talked about buying crude for a very long time. Everyone laughs at me all the time, but look at this. UCO hit $30 from my $25 level. $5 a share. It might not seem like a lot, but in a month, right? Very, very respectable gains. You look at this from a percentage perspective, right? We're up about 20% on the figure, 21% almost. So I still like crude. I still like it for the upside. UCO into 33, 34 is a main target in my opinion, and that puts some downside pressure in the equity market as we start shaping these things up. So like I was going through multiple different planes and whatnot, I'll be looking for maybe some more expanded upside, maybe a new high at the beginning of next week to kind of sideways chop before I think at the Fed or after the Fed we start pulling back in the markets to start that maybe few week pull down either next week or the week after. So not that I'm extremely bearish, but I think that we're running a course where the buyers are evaporating and they want lower prices in order to be able to run into the highs yet again. So that's one of the main things that I'm going to be looking at for the coming week realistically as this equity market shapes up. One of the other things that I like to look at is I think that Apple is topping out realistically. I think that there's a little more downside momentum on Apple that's going to pull things lower, especially if Apple starts pulling down with other tech names, because Apple by itself, right, yeah, it's a huge constituent, but if everything's just flying higher to the sky, it's going to be a little more difficult in my opinion, realistically. And there's, I think like the precious metal trade is still on. I like copper names like FCX. This is probably one of the names that I have already picked it up for 2025, 2026 leaps on options, but I like how this is playing out, and also silver. Any dips on FCX, sorry, let's go back for a second. What do I do? Any dips on FCX, I think like even into 36, 35, I do like it. I think those are gifts. Silver, SLV, I like that one as well. Anything under like 2050 realistically, I think these areas are going to hold for some kind of upside continuation. These are the plays that I'm looking for the next few months realistically. And then I do want to take a look at how the futures are doing. Right? How are the futures doing? So, what is causing crude to go up, you think? More buyers and sellers. Well, I think like one of the main things, what's going on in the Suez Canal, I think it should have had more upside pressure in crude, but I think that crude has been beaten up too much, and from a cyclical perspective, we're bottoming out somewhere in crude to see that next extension to the upside. I think just generally we're very undervalued here, and I think there's opportunity in crude from that perspective. Also, demand starting to peak back up. Nothing too deep, I think, in crude, honestly. Just from like cyclical bases, we've pulled back very drastically, and we've rotated, and buyers have just kept coming in, so I liked it. If we take a look at my wonderful, colorful profiles here, if you do have any other questions, just please let me know. Take a look at my wonderful, colorful profiles here. What I'm looking at is a monthly, weekly, and daily on the S&P 500. You can see on the daily just constant compressive volume profiles that have just been trading sideways for a very long time. The weekly is pretty top heavy with the POC at the highs here into this 20 area with a lot of volume here and down here as well. So the way I see this is it's going to be very difficult to be short unless we start moving back below 48.95 area. We start opening and closing below that area. We have this unfinished auction over here. You can see this very thin area of volume into that 48.40, and then we'll decide what happens there. All right, very, very thin on this monthly profile as well. You can see where the thickness of volume sits around that 4,800 as well as that 47.90 region. I think those are downside targets. Complete some of these poor lows to the downside, but I would have liked to see a new all-time. Well, today we peaked it just by a smidge, but I would have liked to see a new all-time high by like 10, 15 handles before we start to explore some of this downside. And it's not over yet, right? We have 2 hours until this close, so fireworks can pop off. But the way that I see this right now, we're looking a little overextended to the top side. I'm not saying start shorting every rally, but there's a lot of volume that's been built up into that 30 area, 49.30 over the past two sessions that have traded there. So it is an area where realistically sellers are kind of jumping into this. And I think that if we complete some of these auctions to the downside, prices are going to be a lot happier and be able to extend a bit higher. If we look at the monthly from a larger perspective, we look at a few months of this data, right? There's still very, very unfinished auctions down below. I'm not saying we pull back and get that after the FOMC, but those are areas that I think that price would want to explore, especially if we start getting some downside pressure over the next few months. So as I see this right now in this equity market, I think that we continue this sideways range for the most part of next week. And that could also involve prices coming back into that 48.74 before we pull back up higher. I think we're just overdone and buyers are exhausted. They're done buying and they want to complete some of the auction lower. So 48.74, 48.65, right, are good areas for that final dip to pick up. We could head fake down into this 88.90 as well. But I am looking for some of this auction to complete to the downside before we ping it back up. Whether that happens early next week or in the middle of next week, I want one more high before we start selling this a little more aggressively. But lack of buyers, right? Very, very strong lack of buyers, if you will. Another thing here. Let's see what I'm opening up. This is the Nasdaq, I believe. Nasdaq on a day-to-day perspective, right? You can see that we have weakness in comparison to the S&P. We're not close to those highs. Nasdaq with some of these tech names, especially Tesla, have been putting some downside pressure on this. And what I'm seeing right now, right, we failed at one of the key areas here on Nasdaq today, and we're pulling back lower. Down into this 420, 420, 440 is a very key area. Complete some of this auction to see if we can pull back up. But Nasdaq honestly has a lot of room, right, to the downside. One of the first stopping areas, in my opinion, is somewhere around 17,280. Right, 270, where I think that some buyers are going to try and pick this back up before we can run and complete the entirety of this unfinished auction, in my opinion. So Nasdaq's looking a bit weaker. I think they're in the sell the rally mode realistically until we find some buyers which are going to be 100 to 200 points lower, in my opinion, to pick this back up and try maybe a new high before we see the continuation, maybe after the Fed to the downside. So that's mainly what I wanted to share with you guys, my analysis, my breakdown, my understanding of these markets as I do every week. And I'll be posting more maybe ideas for swings and whatnot and day trades in our trading room on Discord, community.tradeproacademy.com, so you go and check that out. And also tradeproacademy.com. We trade live every single day in front of you guys. And solid day today to wrap up the week. Honestly, we're running into the weekend. Let's see what kind of analysis we come up with on the weekend. And I wish you guys all a happy weekend. I hope everyone has an amazing time, had a great week, and back at it next week. So let me know if you guys have any questions here. And we'll go from there. And we'll go from there.